Should be live now, honestly. It's 8. It's 8. Let's go. I'm so pumped. So excited. Hey, it's live. Let's go. Whoa, let's go. All right, nice. How's it going? Hey, I love you guys. That's all I want to say right off the bat. I love every single subscriber, everybody that watches my video, everybody that follows me on TradingView, anybody that's in the Telegram channel. I love you guys. I appreciate you guys. I love Forex so much. I am so genuine when it comes to teaching it. I don't want to mislead anybody. I appreciate all the support. You guys are amazing. I want you guys to win. I don't want any fellow trader to fail, ever. I never want a fellow trader to fail. I want all the traders around me in the Forex community or the trading community to always win. Um, but before I get into it, I do want to say I am not a professional. So don't take everything with your whole heart. Take it with a grain of salt. Do your due diligence. Most of the information that I have learned was through ICT and Larry Williams' free content, whether it is from the long term short trading book or from ICT's mentorship program that I was in, or his free YouTube channels as well, and all the other episodes that he provided. Ah, man, I'm so pumped. Um, Basically, what we're going to do on Forex Fridays is basically go through the weekly range. We're going to talk about natural price indications. So we're not using any indicators. Deontay does not use any indicators unless it's a session indicator to tell me what time zone I'm in. Am I in Asian, London, or New York? Are there any other indicators? RSIs, Ikomoku Cloud, um, anything else that you could think of. I don't use those things because I know price action can tell me exactly what I should be looking for. So the main purpose of the Forex Fridays is just to get people into the concept of using no indicators, understanding natural price action, and understanding certain key points, and even potentially learning a short-term model or even a long-term model. I want to make sure everybody knows that I'm here. It's live. I got to tell everybody that it's live. Boom. All right, cool. So what we're going to begin with, essentially, and I hope you guys can hear me well because I have my microphone set up. It's my first time ever going live on TradingView and YouTube at the same time. But what we're going to look at is essentially the DXY, UJ, gold, and euro in its weekly range. And then we're going to look at future price action with the DXY, UJ, gold, and US oil. And then we're going to look at some ways I've tried to predict future price action. So we're going to jump right into the DXY, and we're going to look at the weekly range. So when it comes down to the weekly range, what I like to start off is I always like to start at Sunday. So we're going to bring it all the way back to Sunday. So we're going to find Sunday's opening price, which is SOP or SOP as an acronym. Sunday's opening price. It is very important to me to note off where this is because it's going to either determine my oversold or overbought levels. Don't need any indicator to tell me it. So we're going to find Sunday's opening price, which should be 17 GMT right here. This is the opening price for the week. Show this all the way out here. Oh wait, I went way too far. Did I? I did. Yeah, I did. Definitely went too far. I apologize. There it is. I'm looking at the previous week. This week here, this is Sunday's opening price. We draw this out all the way to Friday. This line in itself will tell you if you're overbought or oversold. When you're looking at this chart naturally, you can see where the market makers are selling and buying. High odd sell scenarios are mostly occurring above the line. High odd buy scenarios are most likely occurring below the line. It doesn't take much to see that looking at this chart. This is Sunday's opening price right here. So anything above is a premium, anything below is a discount. So now if we break down each day itself, so we go Monday, Tuesday, Wednesday, Thursday, Friday. I'll mark that out for you guys here. And I want to do everything live and not already present it for you guys, because I want you to see how I actually do it on my chart. So other traders or even new traders that are not familiar with TradingView, they understand the process of how my charts look the way they look. And then we have the start of Friday. Let's take this off. That's the end of the week there. So that's Monday, Tuesday, Wednesday, Thursday, Friday. Now the same concept applies to each intraday trade. Monday, Tuesday, Wednesday, Thursday, Friday has a opening price as well. That is midnight opening price. So at 12 a.m., the algorithm is going to start kicking in gear, and it's going to start its premium and oversold levels, or its discount levels, or overbought levels. So here's the opening price here for Monday. And you can see here, that's midnight opening price. That line right here is 12 a.m. Anything below this is a discount. Anything above this is a premium. We can see here on Monday, and obviously, yes, it is hindsight, but hindsight teaches us what? Experience and exposure. That's the only way you're going to get good at this market. You need to use past data in order to get better in future price action. So yes, you need to look at previous examples in time for you to get better in current price action, which is why we use hindsight to help us understand what price does. Midnight opening price, 12 a.m. Once price gets below this price point, it is a discount. That is a high buy odds scenario. Anytime price gets above this price point here, 12 a.m., that is a high odds sell scenario. You can see here for Monday, price came down below midnight opening price, and that's 12 a.m. I live in New York. Everyone asks us all the time, where do I live? I live in New York. I live in the United States. I live in New York. Price comes down below 12 a.m. and then rallies. We'll look here at Tuesday. We'll zoom in a little more because I want to make sure people see the full scope of it. Anything above this price point is what? Premium. Anything below this price point is what? Discount. Where is the buying opportunities coming in? It's pretty clear, right? We can see it's being sponsored below the line. I didn't need any indicator on my chart to tell me that. This price point here, the opening price here, that's fair value. That's the starting open marketplace price. Price starts at this value here. And as soon as it drops down, it is now cheaper for you, the trader, to buy. Or for them, the people that actually control the price action, the commercial speculators, they are now looking for a buy opportunity below this line. Once price gets above here, they are probably going to get out of their buys and look for some type of sell scenario. And as you can see, it's above Sunday's opening price, right? This line here, it's the same concept, but on the weekly range. This is Sunday's opening price. It's in a premium, and then price comes down. And you can see now it's leaving premium and going back into a discount for the week and for the day. It's back down in a discount. So they're not picking random points to sell and buy. They're only permitted to buy. Listen to this. They're only permitted to buy at fair value or discount. Listen to that again. The commercial speculators are only permitted to buy at the best price possible. And the best price possible is fair value or discount. The same thing could be said vice versa. They are only permitted to sell above fair value, which is premium, or at fair value. We could see here for Tuesday, clear example, it's night as day. Price comes up above midnight opening price. It's just 12 a.m. 12 a.m. price point. Price comes above it and then sells. That's not random. They specifically waited for price to be more expensive to get out of their longs and sell. And most odds are retail traders are going to do what? They're going to hold the bag and keep buying. because retail traders are buying in a premium. That's the problem. Retail traders are buying at a premium. That doesn't make any sense. Why would I want to spend more for something? Logically speaking about it, why would you want to buy something at a higher price? If you went to a supermarket, let's not say a supermarket, let's say you went to your favorite clothing store, your retail clothing store, and you saw a pair of sneakers or a t-shirt or a dress that you liked, right? And you see that it's priced at, let's say, $100. But you know in your head, later on in that week, they're going to have a 50% sale. Are you going to wait till the end of the week, or are you going to buy it today? You're probably going to wait till the end of the week to buy that dress or those shoes or that t-shirt that you like at a 50% discount. That's what's happening here. Every day, it's a discount. They're buying. It runs up. And then what happens? Now they're selling now. It's too expensive. They get out. But retail traders are trying to buy above 12 a.m., which is why they end up buying at the high of the day, right? They end up buying somewhere up here. Now, obviously, we don't know if they're really buying specifically at that high, but we know that somebody throughout the trading day is buying above 12 a.m. Why? Why would you ever do that? You've missed the opportunity. You would need to wait for price to get back down here below 12 a.m. to find a buying opportunity. If you see that you're above 12 a.m., you should be seeking a sell opportunity. Now let's move on to the next day. Keep this in mind. That line here is Sunday's opening price. Same concept. This is the opening price for Wednesday. For those joining, this is the DXY, and we're just going over the weekly range. This is the opening price for Wednesday. This is 12 a.m., midnight in New York time. What is occurring specifically on this day? Where are the sell scenarios forming? Above 12 a.m. Pretty obvious, right? And then you can see down here below, what is that? Discount. Quickly, as price opens, it drops down below. It's cheaper for the day, and they rally it up. And where do they rally it up? They rally it up above 12 a.m., back over the opening price for Sunday. Look at that right there. And what is that? Premium for the week and premium for the day. Is that not too obvious to see? Look at that sell setup up here. It's too expensive. That's what's going on here. It's too expensive above this price point here and here. They're selling. I didn't need an indicator to tell me that. To tell me, oh, it's overbought. For what? Why? Why would I want to put on an indicator, a moving average, an RSI, a Ikomoku cloud indicator to tell me, oh, I'm out of bounds, or prices at the 100 level, so chances are it's going to sell? No, it's a lagging indicator. By the time you find that sell scenario, price has already moved, and you're in the dust once again. Every single day, you're in the dust. Let's move on to the next day. This is Thursday. This is the opening price here at midnight, 12 a.m. Concepts are very simple. People like to overcomplicate Forex. I don't like to overcomplicate the process. I have other things I have to do outside of Forex. 12 a.m. This is the opening price. Where is the sponsorship for buying happening? We can see it's happening right here. Rallies, comes back down, rallies, comes back down. It even opens here, shoots all the way down. Where does it? Doesn't randomly shoot to any price point. It shoots back down to discount. Look at that wick. It shoots all at one point in time. This candle opened and was a black candle, and it was going all the way down, all the way down, all the way down, all the way down. And like I said, they are only permitted to buy at a discount, and they waited for price to come back here. Boom, another sponsorship. They sponsor the buy again, and now price rallies. And now price is once again above Sunday's opening price. And it's above 12 a.m. It's oversold again for the day. Look at that. It's at a premium. This is Sunday's opening price. I think this is DXY, so 5 p.m. New York Eastern time on Sunday. This is that price point line right here. Sunday's opening price, 5 p.m. And you see it comes back down. Look at that selling opportunity there. because it's oversold once again. Move on to Friday. We'll draw out the rest of the day. This is Friday. It's actually right. It's the opening price is literally almost on the same line. I'll make it thicker so we can see that. Hope you guys can hear me. That's the opening price here for Friday. This is 12 a.m. You see price runs up and then price comes all the way down. Right? And then where did they sponsor their buys once again? Below midnight opening price and below Sunday's opening price. It's always been in front of you guys the whole time. It doesn't matter what asset class it is. It could be crypto, it could be futures, it could be gold, it could be US oil, it could be commodities, it could be anything you want. It's the same concept on all asset classes. Nothing has changed. It's fundamentals. Why would you buy at a premium? Doesn't make sense. Why would you sell at a discount? Doesn't make sense. You wouldn't want to sell your product or service at a discount every single day in your store. No. You want to sell it at fair value or a little higher than market value so that you can make a profit. Nobody is here selling at a discount. Nobody. The commercials are not waiting for price to come here. And then they're going to say, "Hey, you know what? I think it's time to sell again." No, they're not doing that for the day. They're waiting. They're waiting again. Price comes back up. Premium. Now they're saying, "Okay, I am now permitted to sell once again in the marketplace." And what happens? They sell the market again. But most people don't know this true nature in Forex or any asset class, whether it's Forex, stocks, options, whatever it is. They don't know this natural price indication because they're all caught up in the indicators. Why do you have an indicator on your chart? It doesn't really teach you what the candles are doing. Now let's move on. So this is the DXY. We'll jump right onto Euro. And we'll move a little faster. I don't want to sit here contemplating on this idea, but I hope you guys are understanding that. And if there's any questions at all, please ask. Don't be afraid to ask me. And this is being recorded, so if you want to play this back after it ends, you can do that as well. So we'll go back to Sunday's opening price. Right. Where are we at? There we go. That's Sunday's opening price. Just looking at this price, look at this price point the entire time. When I draw this line out, oh, it's a down close candle, so it's above. I know it's up here. There we go. Just looking at this chart with hindsight and looking at this price point that I just drew across the screen that split this range in half. Anything above is a premium. Anything below is a discount. You see it now. Do you see it now? That's Sunday's opening price. For anybody that's joining, we're just going over the weekly ranges. This is EU. This is the current week that we just finished here. This is 5 p.m. New York Eastern Standard Time. I drew this line all the way across to Friday. It is hindsight, but it teaches us something here. It's exposing us to a concept here. Oversold and overbought. When price goes below this line, every time price comes below this line, what happens? How many times does it do it? Price comes up, it's expensive, it comes down, it's now cheap again. What happens? Price rallies. Price is now expensive once again. Price comes down, what does it do? It rallies. Price comes close here, you can see here on this day, on Wednesday, comes really close. They're still permitted to buy. If it comes close to fair value, they can still have an opportunity to buy again. It runs back up. Price comes back down. The red line is fair value because it's the opening price for the week. It's fair value. Comes down a little bit below it. Discount. What happens? Rallies again. There's no magic to this. What I'm showing you is not rocket science. Anybody can do this on their chart right now. You could take out your MT4. You could take out your TradingView account. You could check any commodity pair, any Forex pair, any cryptocurrency, and you could do this right now. And you'll see this same pattern time and time again. Price comes up, comes down, And what does it do? Gets below discount once again, and then it rallies. These are not concepts that you guys are unfamiliar with. You guys are definitely familiar with this. I know you guys, all of you guys, all my followers, anybody in the Telegram channel, anybody in my Trading View that follows me, you guys are remarkable traders. You guys know exactly what you're talking about, but it's the specific moments in time that you're getting in. So there he is. I noticed. Yes, Sunday's opening price. Absolutely, Chris. Absolutely. Sunday's opening price. Now, if we were to go down to each trading day, like I said, now this is just the weekly range. If we were to break this down from Monday, Tuesday, Wednesday, Thursday, Friday, the same thing is occurring each day. So let's look into each day real quick. So that's Sunday. I'm not trading Sunday. I'll sleep in Sunday. I love my sleep more than the markets. I'll tell you that. Boom. Friday. Monday, Tuesday, Wednesday, Thursday, Friday. Let's look at Monday. Let's look at Monday. Let's go all the way to Monday. I'll definitely get into the Q&A soon, shortly. But I just want to get through the weekly range. I really appreciate you guys so much. I appreciate you guys so much. Thanks for the support. That's the opening price for Monday. This is Monday. You still have to keep in count of where you are from the weekly range from Sunday's opening price. This natural candle, right? It's opening price. It's a natural indicator for you. You don't need to go in here, right? You don't need to go in here and start typing in oversold. Oversold, overbought RSI. This is nonsense. You see this right here? All these indicators, nonsense. You will never see this on my chart. You will never see one of these on my chart. But then some people may say, oh, what is this on my chart? This is just the session indicators. It just tells you when Asian, London, and New York is operating. That's the only reason I have this here. But besides this, we're looking at raw price action every single day. This is 12 a.m. When price goes up and it comes down, what happens? It's selling at a premium, right? It's selling at a premium for the day and for the week. Do you see the confluence there? It's selling in a premium for the actual day on Monday, and it's already overbought on the week. That is a high probability sell scenario. You can't miss that. Comes all the way down, gets back into a discount, and what happens? The volume cuts off, and we'll get into that another day. But you see how the volume slows down and the market starts to consolidate. That's a dead man zone. You don't trade here. You don't start trading until Asian session. Moving on to the next day. What happens here again? Once again, what happens again? Draw it out like here. 12 a.m. Center. Look at that. Wow. Price comes up, sells. Price comes up, and what does it do right here? What is occurring right here? It's going back into a premium. Premium, and then it sells one more time. And then after the rest of the day, you get that London close. You can see this is 10 a.m. So that many of you guys that are familiar with the ICT London close reversal, look at that 10 a.m. candle. This is the 1 hour. Look at that 10 a.m. candle. Look how price turns around. And where is it turning around at? Discount. It's been right in front of you guys the whole time. Turned around in discount. It's a discount for the week. It's below Sunday's opening price, and it's below the day's 12 a.m. opening price. London close. Look at that reversal. Comes all the way back up here. You're telling me you couldn't scalped off 10, 15 pips here. You definitely could have. And I know you have it in you. All you guys have it in you to find these setups. They're very simple to find. Let's move on to the next day. That's 12 a.m. Once again, write out a little more. That's 12 a.m. Look how price comes up, comes down. Where is it selling mainly for the bulk of the day? Right here. Moving up into a premium and then selling off really quickly. Doesn't get back to Sunday's opening price. But like I said earlier in the video, if price comes back to fair value, odds are they are still able and permitted to buy again. If price comes back to fair value, they are permitted to sell again. It's that equilibrium price point. Price comes back up into a premium. Look how it wicks in here real quick. And then look how the next candle turns around and runs right back down real quick, back into a discount. And then price continues to trend slowly and then consolidates for the rest of the day, going into Asian. We'll move on to Wednesday. This is a great example. That's 12 a.m. Price goes up and comes straight down. Premium. Premium for the week and premium for the day. That is just liquid gold right there. Like I said, not a single indicator told me where I should be selling. I am the indicator. All of you guys looking at your own chart, you are the one operating your trades. You're the indicator. You need to determine when you should be selling and when you should be buying, not this flashy little computer coding that someone made. It's unfortunate that people spend their lives working hard to code these algorithms and these programs, but all these programs tend to lag. They're way behind price action. Price action turns on a dime. That indicator is not going to sit here and tell you sell now. It already sold. Look how quick that reaction was. It runs up here and then it drops. Then the indicator is going to sit here and then tell you sell here. It's going to sit here and then say sell here, sell here. But then you're selling where? At a discount. That doesn't make sense. That is nonsense. You're selling at a discount? Why? You're selling at a discount. You should be looking for a buy opportunity. You should be looking for a buy opportunity. Look at the buy opportunity. It's below Sunday's opening price and it's below 12 a.m. Someone said in the chat, got you, cool. Referring to EU King's discount SOP returns. Yes, yes, absolutely. You're definitely right, Chris. If AMD is above New York session opening price, yes. Go into Friday. Friday's a back and forth day. This is really a choppy day. It's back and forth. But could you make money here? Possibly. Not saying every trading day you need to get in here and trade. But that's the opening price. Where are they selling once again? They're selling above this price point line. Price comes up and then it drops. Wow. It took me 2 seconds just to figure that out. I didn't sit here sitting behind my screen frustrated, screaming at my screen. I don't know when price should be selling. As soon as it gets above here, you're on the hunt. You're on attack mode. If you are going into this day bearish, if you're going in, think about that. If your bias for Friday is bearish, why are you buying below discount? Doesn't make sense. If your bias for Friday is bearish, why are you buying below 12 a.m.? You're contradicting your own self every time you trade. If you're going into this day thinking this day is bullish, right? You must wait for this. You must wait for price to get below 12 a.m. to then be a buyer. And as you can see, price comes below 12 a.m. and Sunday's opening price, a small buy opportunity presented itself. So we'll jump right on to now. We got gold next. Who's next? I think it's gold. Yeah, we'll do gold. Is this gold? I think this is gold. I had that sell opportunity, and it stopped me. Stopped me pretty good. And I remember someone in the chat referring to gold, and they wanted to see gold. We'll talk about gold right now. Then we'll talk about it right now. Where's our Sunday's opening price? Right. Oh yeah, gold opens up at 6, not 5 p.m. I think it's 6 p.m. Yeah. When I draw this line out and I cut this range in half with the natural indication of Sunday's opening price, it unlocks another thing. You see the chart completely different when you do this. All of a sudden, it makes a lot more sense when you put this line in here, right? It just looks so, it makes so much sense because you're seeing why the hell is price going up and then down here, and then as soon as it gets down here, it's giving a nice rally. And then as soon as it gets above this line, it's giving a nice drop because it's natural price action. That's what's occurring here. You want to sell at your best opportunity ever. Look at this sell up here. Look at how it rallies. It rallies from a discount and runs all the way up to a premium. Not one time did you see here, and in any of the examples that I showed you, not one time did I show you an example where price came down here and then found a way to sell again like this. Yes, this week was sideways because the DXY was sideways. If the DXY is in consolidation, mainly everything else is going to be in consolidation. If the DXY is in consolidation, gold, EU, GU, NU, AU are all going to move in sideways price action normally. But you can see every time price came down here below Sunday's opening price, you found a buying opportunity. And then price came up here, you found a selling opportunity. I'm not looking for buys when I'm up here. When I'm up here above this price point here, I'm done looking for buys. I'm done. I'm physically not permitted to go into my MT4 and click buy when price is above Sunday's opening price. Because I know eventually they're going to want to turn this market around. Because the best opportunity now above this price point is to sell. It only makes sense. I think someone also said SOP was. Yes, yeah, absolutely. You can see every single time SOP is the key player here. This keeps you in bounds. Yes. Anytime you feel confused, you're going to refer right back to this price point. You feel lost. If you ever feel lost during your weekly range and you don't understand what you should be doing, you don't know if you should be a buyer or a seller tomorrow, just refer back to Sunday's opening price. That's going to then put you a step further ahead of retail traders. Most traders here are just sitting here and thinking, oh, tomorrow is just going to buy because buying pressure. There's no buying pressure. That word literally doesn't exist. A lot of people say it, but they use it like a word that they would use every day, like yo bro, yo bro, yo bro, yo bro. Buying pressure, buying pressure. No, there's no buying pressure. Not to be rude or anything, but there's no buying pressure, and there's no such thing as selling pressure. Those words and terminologies are retail logic. There's no selling pressure. It's redistribution, reaccumulation, distribution, accumulation, consolidation. Those are the words people need to be using. It's not buying pressure. What's buying pressure? What is buying pressure? Please explain to me what buying pressure is. Because then people are going to sit here and tell me, oh, Deontay, I just put on my volume indicator. I think this is gold, so it's probably not going to show it. Not this one. Which one is it? Yes, this one. This classic one right here. The one at the bottom. The volume, Deontay. The volume. Volume what? The volume what? It doesn't tell you anything. What does this volume actually tell you? What, there's a huge amount of people trading at that time? Yes. This orders in the market continuously being pumped into the market. There's a buyer and there's a seller. But you're in here telling me there's buying pressure and there's selling pressure. That's nonsense. But no, you could stick to your indicator and you stick to your RSI and you tell me where you're gonna find your sell setup. So I hope that makes sense. I hope I'm not losing anybody. I'm not trying to bash anybody for using indicators either, but I just know that it's not optimal to be using them because it's not really teaching. You're using it as a crutch. That's my main idea. You're using the indicator as a crutch to tell you I need to buy now. And then you click buy and then it doesn't go anywhere. For instance, TradingView. Not to bash TradingView because I'm streaming on TradingView, but not to bash you TradingView. You go on TradingView and you click any pair. Let's say we look at UJ. There are people, and I know there's people out there in the world that are using this right here. You see this little thing down here? People are using this. They're looking at this and saying it's selling. It's selling and selling. It's selling. It's selling. Then it goes down. Strong sell. And then what are they going to do? They're going to open up their MT4 and they're going to be like, yes, this is a resistance zone and it's telling me sell. So they're going to go max margin, full margin. And then what happens? The broker's going to say, oh, we called you on a margin call. We have to close all your trades again because you went selling because the indicator told you to sell. And then all of a sudden UJ magically does this. And then you're sitting here wondering, what? Nah, it was buying pressure. It wasn't no buying pressure, bro. You're lying to yourself. You don't really want to learn Forex. You don't really want to learn how to trade price action. You're using cheat codes. It's unfortunate, but you can't cheat your way through learning this market. You have to look at it just the way it is. You see how my chart is bare? There's nothing on it? That's how I look at my chart every day. And people think I'm crazy. I'm not crazy. I know exactly what I'm looking at. I know what time zone I'm in. I know where Sunday's opening price is, and I know what midnight opening price is every single day. I know my bias every day. I know if I'm a buyer or a seller. I'm not going into tomorrow thinking, you know what, tomorrow, I think gold's going to go up. Let me just go buy tomorrow just because. No, there's a step process. There's a filter for me to be a buyer, and there's a filter for me to be a seller. But people don't create models for themselves to tell themselves, okay, now tomorrow I should stay out the market. Oh, tomorrow I should be a buyer. Tomorrow I should be a seller. No, they're randomly picking a side. You're gambling. So you mean to tell me you're taking your live funds that you work hard for from your 9 to 5 job, right? Your 9 to 5 job that you're working your butt off at. You're taking your live funds and coming here to gamble? It's not a game. People are trying to make millions of dollars trading Forex. People are trying to make a living. People are trying to replace their 9 to 5. People are trying to pay bills with Forex, with trading options, with trading stocks. They're not here playing games. You think the commercial speculators, the people that actually move the price action up and down, you think they're playing games with indicators? You think their charts have indicators on it? No, it does not. It looks just like this. We may not know behind the scenes what the commercial speculators' charts look like, but I guarantee you, if you look at their charts, it probably looks close to something like this. Nothing on it. And it's probably like a little dot here and a dot here and a dot here and a dot here and buy order here. So that's all it is. It's not all this other stuff. And I don't mean to bash anybody. Like I said, let's do this real quick. How do I do that? Oh, not my ideas. It's other people's ideas. How do you get to it? What's on your mind? Yes, here we go. Perfect example. Perfect. I don't even have to. I can already see retail trader. I don't have to look too far to know this is a retail trader. What is this? Not to bash this trader. Respect to you, but I would never do this. Look at all these zones. This zone, he has this zone, he has this zone, he has this zone, he has this trend line, he has this trend line, he has a bounce and come back, then he has the volume indicator. What is this? This is nonsense. That's not trading. That's you using a computer robot trying to tell you, oh, I need to buy, I need to sell. It looks like a Christmas tree. Definitely does. Definitely looks like a Christmas tree. But this is what I'm trying to say. People are not learning price action. And ICT does it well. I appreciate ICT for everything that he put out to the trading community. Not once have I sat here and claimed that I've made these concepts. I want to make that clear. I never sit here and claim I made these concepts. Never. None of the concepts that I use. IPTA, midnight opening price, Sunday opening price, order blocks, fair value gaps, breaker blocks, mitigation. I don't sit here and claim those things. I appreciate ICT. Thank you. I appreciate it. And I'm going to take the knowledge and apply it on my chart and see how it works for me. So moving forward, though, I want to show you guys something too. So we're going to jump right back to, we're going to jump to GU. Yes, we're going to jump to GU. Oh my gosh, you guys are going to love this one. Earlier this month, I posted a video of IPTA part 2, right? And it was, where's GU? GU. Where you at? There you go. Yes, nice. We're going to daily now. Because speaking about IPTA, might as well just go and talk about it right now. All right, it's 8:41. Cool. When I posted that video, price was probably somewhere like here, right? I think when I posted that video, price was somewhere here like this. And what I told myself, because I know price action, I said there's sell side liquidity and there's buy side liquidity. There's internal liquidity and there's external liquidity, right? Price comes here from the start of the month. This is January 2nd, Monday. I look back 20 days. I have the 20-day high and the 20-day low. Those are the lowest point. That's the lowest point price has been compared to the relative day of the start of the month. And this is the highest point price has been relative to this start of the month. I draw those out. I cast for 20 days because like ICT claims, and he says, every 20 days, the market is most likely going to change trend and find a new liquidity pool. And that's exactly what happened here. Price comes down and takes out the 20-day low. What is the 20-day low? It's a swing low. There are multiple lows here, right? Some people may say, oh, this is a triple bottom or double bottom, whatever bottom you want to call this. We know it's a bottom. And price runs right through it. And what happens? Price then is most likely going to run to buy side liquidity. Where could buy side liquidity be? Above swing highs. There's one right here. There's one right here. And what happens when you play price forward? Liquidity taken. 1, 2. And where's the last one that it could potentially reach for? That 20-day algorithmic look back period high. And price runs all the way up there. Hits it. Tags it a little bit. Does it have more strength to run through? Probably. I'm not sure. Until February starts and I do the whole thing over. Because once February starts, I'm going to do the same thing again. And I'm going to look for my 20-day high, my 40-day low, my 60-day high, my 60-day low, and etc. And I'm going to use these levels to key off of. But you can see how it takes out sell side liquidity. It's methodical. It's not random. Because if the market was random, it would do this. Every day it would just do this. We would have no idea. This is what the market would be. Anybody that sits here and tells me the market's random. Okay. So how do I know that it was going to run to the 20-day high? How did I predict that? This clearly is some strategic model or some type of coding to the market. And we just saw it. Runs to low, runs high. And this is for somebody, I know someone in the Telegram channel was asking long-term models or swing models. After knowing that the 20-day low is ran, I want you to look at every single candle inside the month of January because the January is coming to an end. Look at every down close candle in this month of January. Doesn't take a rocket science to see it. Look at every single one. Do you see it? What happens after we get a down close candle? Price rallies away from it. That's not random because they want price to go higher. Price is at a discount. Price is at a discount. It's cheaper for the day of the month or whatever week it is. It's cheaper. Somehow, some way, it is cheaper. That is a cheaper day. The next day, you need to go hunting to go find the buy setup. It may not happen the next day. It may not happen the next 2 days, but odds are it will formulate. Now, let's just take a look at this. Once we run that 20-day low, let's say we started here. We run this. This is a down day. You know that buying is supposed to come into the market sometime, someplace, right? And like I said, yes, it's hindsight, but I did knew it was going to run here eventually to the 20-day high. What are you going to do as a trader tomorrow? You're going to buy at the open. You're going to set a buy stop here, and you're going to set a buy limit here. You're buying in on strength and you're buying in on weakness. What happens on the next daily candle? Let's slow it down. Boom. It hits you in on weakness and gets you in on strength. You're now long on both sides of the candle. You could have just picked one side if you wanted to. But odds are, we'll see this time and time again, the market will run the low and run the high. It's not magic. It's not magic. It's not magic. Let's keep playing. Up, down, close candle. What do you do now? What do you do now, Deontay? I do the same thing. I set a buy stop here and a buy limit right here. Where's my stop? Where's my stop loss? Many people may be asking. My stop loss is probably going to be below the last 20-day swing low. So I'm going to either count back 20 days and find that recent swing low. Because if the market structure is bullish, they do not want to run swing lows. If the market structure is bullish, they are not going to run the swing lows. They want to protect the swing lows and they want to attack the swing highs. Don't let that go over your head. If you are bullish, odds are, and if the market is trending, if it is truly trending bullish, it's not going to take out the swing lows. The swing lows are going to be protected. What happens the next day after this down close candle? Nothing. I don't want you guys to see that part. Nothing. Nothing happens here. It's okay, but you're in long. You're holding. This is a long-term play here. Because many people are saying, oh, I need to find models that help me, get more sleep. For me personally, I don't like intraday. I need to get more sleep, or I have kids, or I work a 9-to-5 job. I got a spouse to take care of. I got a family to feed, etc., etc., etc. Yes, this is demanding. Trading can be demanding, but there are ways for you to take a break and not look at the chart for that long. You knew that this month of January was going to be bullish from the idea the 20-day low was being taken. Now you go down to the daily time frame and you wait for each down close candle on the daily. You're in on weakness and you're in on strength. And look how it just trends. Another down close candle. What happens? The same market structure is happening. The same pattern that you're seeing every single time. It's taking out the close and it's taking out the open every time. You had one opportunity, two opportunities, three opportunities. And what happens? Runs until your final destination. Boom. You're done. You finish all your trading for the month. You could have made probably over 500 pips, over 1,000 pips without having to even look at the 5-minute time frame, without even having to look at the 15-minute time frame, waiting for a break of market structure. Sometimes that is confusing for most traders. Most traders look at the chart and they're like sitting here like, oh, ICT said this and this and that. I know he did say that. But do you understand it? Maybe not. But does another fellow trader understand it? They probably do. There are some great individuals out there that are trading on the lower time frame that I'm just like, I envy. I'm like, wow, you're able to get that sniper entry at the high of the day? Some people can't do that. Oh, you're able to get that sniper entry at the low of the day? Some people really can't do that. And they physically don't have the patience to sit here and watch London session, New York session. They want a quick, dirty, down and easy way to get in the market and say, yeah, thank you. I got my buy. I'm going to hold till Friday. I hold till Friday. By the time they check Friday, they made profit. Cool. But if you take a loss, you take a loss and you move on. But with proper risk management, you're risking what? Probably less than 1%. Or you're risking 1%. But odds are, if you're going to trade a longer term setup, you need to risk small. When people start jumping down on the 15-minute time frame, this is what they see. This is exactly what they see. It's a whole process. It looks simple on the daily, but when they break it down like this, when they see this, let's do it. Let's do the hourly. It's a little more concise. When they see this, their mind goes, oh crap, man, I don't know what's going on here. Look how many different things are occurring. There's multiple cycles going on in here. Accumulation, redistribution, reaccumulation. There's a whole pattern going on here within itself. It's a fractal. There's so many fractals going on in here. The average trader is not comprehending this. I guarantee you that. Retail traders are losing their first initial deposit within 6 months. That's a real statistic. Most retail traders who put their first initial deposit into a live account, within 6 months, they're going to blow all the funds. Whether that is because they're over trading, whether that they have poor risk management, whether that they just don't know what the hell they're doing. That's what's going on here all the time. And I apologize if I'm not reading the chat. I'm just like really focused on trying to explain this to you guys and paint a picture to you guys. And this is what we're going to do every Friday. Every Friday, I'm going to come on here. I'm going to tell you guys that is not it. I'll be honest with you. I'm not afraid to tell people, no, that's not. I don't think you should be going this way about it. I think you should be going this way about it because it makes more sense logically. It is sound. There are metrics behind it. The indicators don't have real metrics behind it. The indicator is not the algorithm. It's not. As much as people think that their indicator is the algorithm, it's not the algorithm. Your indicator has no ties to the algorithm. It's just reading price ticks going up and down. That's all it's doing. It's not the algorithm. It's not the actual gears that move the market. Because you throw on that indicator, you think you're the algorithm. No, you're not. You're not some fancy dude that's sitting behind at a central bank trading. Because I guarantee you the central bank traders are not using indicators. And if they are using indicators, because I'm not sitting saying they don't probably, they're probably using one or two. Very simple moving averages or very simple RSIs. They're not using all this other complications that other people are using. Like I said, we can easily scroll through some of these people's charts and we'll see it time and time again on TradingView. Time and time again. Time and time again. What? What is this? What is this? What is this line that he drew here? There's no metric to that line because me and you would draw that line completely different. If this person was to sit down and tell me, Deontay, you can trade based off of trend lines, I will laugh at them. I will tell them you are wrong because it's not sound. There is no metric behind it. There's no real measurement because my trend line will go maybe a little slightly a little lower at this angle or 45 degrees or 50 degrees. It's not sound. It's not a one standard thing. So back to the daily though. I don't mean to get off topic, but back to the daily. How many times could you find the opportunity to go long here? 1, 2, 3, 4, 5, 6. All it took was 6 trades. Think about that. All it took was 6 trades for the month. 6 trades. Not 5 trades in one day. 6 trades. You can't make a motto out of this for a living? That's why I said when I saw ICT's video and he was speaking about long-term setups or long-term models and he played it out to me, it puzzled me because I said, wow, that was very simple. And the average person doesn't have time to trade Forex. They're either a college student, they're either a wife, they're either a husband, they're someone's boyfriend, girlfriend, someone's son, someone's daughter. They play for a football team, basketball team, swimming team, whatever it is. But odds are, every time I'm checking everyone's YouTube channel, I'm not bashing these traders at all. It's all love. But every time I'm checking everyone else's channel, everyone else's post, it's always something on the 15-minute, the 1 minute, the 30 seconds time frame, the 1 second time frame. For what? For what? I don't need that. I just showed you 6 trades for the month and I'm done. You could have made $2,000. You could have made only $100, depending on how much you're risking or how big your account equity is. But eventually, because people say, oh, that takes too long. Well, wealth takes long. You're not going to be a millionaire in one night. Because if that was the case, we would have a lot more millionaires in America, a lot more millionaires in Europe, London, Australia, Japan, China. Everyone would be walking around millionaires. Impossible. Long-term wealth is from long-term trading. Short-term trading promotes what? Poor health habits and poor trading habits. Because when you're on the 15-minute time frame, you think you can get a quick run up to the buy side liquidity or a quick run down to sell side liquidity. And what do? I can make a quick lick right now. I can make a quick 10 pips up and I can make $3,000. And then all of a sudden it goes down against your position and then you're hoping that it comes back to at least break even. And it never comes back. It keeps running. Keeps running away. But this is how I would use IPTA. This is how I use IPTA every single month. Not every month is going to be the same. I'm not saying that I'm coming in here and I'm picking the high and the low and I know exactly where it's going to go. No, I don't know. I'm just painting a storyline for myself every day. I'm not sure if GU this month of January, I didn't know if GU was going to go up here, but that was my speculation. But it could have broke the low, right? Could have came back up here, broke out some swing highs up here, filled in this inefficiency here, and it did what? It could have sold just like that. And I said that in the YouTube channel. I said that on the YouTube episode. I said I don't know, but I think odds are it's going to go up like this because I was comparing it to other things. I was using what? The DXY. I was using euro. I was using New Zealand dollar. I was using other things to compare to pound dollar to speculate, okay, this should be primarily bullish and it should primarily try and take out the open float. Where are the large orders residing? Above the 20-day high. That's it. And if it takes this out, what are odds are that it comes out and runs back down to probably the 40-day low, which is somewhere around here. One of these lows here. I don't know which one it is, but it's one of these lows here. What are the odds of it coming down here now, going into February? It's a possibility. Inverse correlation. Yes, it's a lot of things you got to do. There's a lot of things that I do. It's not just one way. There's a lot of few things you have to do, especially trading the higher time frame. You would want to speculate it like this. Now let's go even further. I want to show you guys the power of this because people don't see the power of this trading. They think, oh, that's boring. I know it's boring, but it's secure profits. I'm more comfortable. My hands are not getting sweaty and clammy. I'm not checking my phone every 2 seconds. I'm not waking out of my sleep with my heart rate going up. I'm like, oh my gosh, I got to go check my trade position to make sure I wasn't stopped out. No, I don't have to do that. I could rest easy at night. I could sleep in. I don't have to worry about checking the chart. I don't have to check everyone's trade and think that I'm going to get stopped out or, oh, I think that gold's going to drop and some analyst, some professional financial advisor goes on NBC or whatever financial institution that you watch, says gold is going to drop. And then I jump into my phone. I'm like, oh my gosh, you got to check gold. You got to check. No, I'm not checking gold. I'm not checking gold for any of those guys. None of them. I'm not checking that stuff. Same thing goes here. Let's check it out on the higher time frame. Let's say we go on the weekly. We'll get rid of all of this. It's all hindsight. Like I said, it's all hindsight. Theoretically, right here. It's the weekly time frame. Think about it. It's market structure shift. Simple idea. You have a swing high. 1, 2, 3. Cool. You look on the weekly, you see this. And then you see price do something like this. Speed it up a bit. You see that. What happens in your mind here? What are you thinking to yourself? Oh, did we come off a PD array down here? Or did we sweep a swing low on the left side of the chart? Probably. Maybe. Let's say we did. And let's say we hit some type of discount bullish order block, just to keep it simple. And then all of a sudden price comes up, creates this swing high, and then price runs that swing high. At this point, in my mind, Deontay at least, I'm speaking for myself, Deontay is going to sit here and look at this chart and tell himself, I am bullish. And like I said before, I am not a financial advisor. I am not a professional. Do your due diligence. Go on ICT's YouTube channel. Go through all this free content. Look into Larry Williams. Buy his book. I think his book is one of the best trading books ever. Every time I read that book, I find something new. At this point, I see a market structure shift. Let's say I don't take this down close weekly candle, right? Let's say I don't take this one for the model's sake. Now at this point, I'm waiting for a higher swing low. And I already have it. Simple market structure shift. It's higher lows. There's one down here. I'm going to do it here. There's one here. And there's one here. And there's another one here. We'll make them blue so no one's confused. Okay. You clearly see something's going on here because there's higher lows being formed, higher swing lows being formed, and swing highs being broken. At this swing high being broken, I want to see a higher swing low form after this being broken. We got one here. 1, 2, 3. It normally is confirmed once the middle candle is broken, but I know it's going to be broken because of hindsight. But once this candle is broken, that confirmed. That's how you know you have a confirmed swing low. This swing low is not confirmed until the middle candle's high is broken. That's how you know the swing low is confirmed. Same thing here. 1, 2, 3. This candle's high is broken. This swing low is now formulated and is now, well, it's a proper swing low. This comes up. Now I'm waiting for higher swing low. Boom, I got it. I got the higher swing low. At this point here now, and this is why I was teaching the high probability scalps on TradingView. At this point now, I'm going to be looking to be a buyer. Simple. This is the weekly time frame. Each one of these candles is a weekly time frame. Weekly candles are. I'm waiting for a down week. Let's just wait. We're going to wait because I'm a buyer now because market structure shift. Waiting for a down candle. Sometimes it takes long. It's a waiting game. If you're going to trade on these higher time frames, you got to wait. Weeks on it. Look how many weeks went on and there's no down close candle. Boom, we got one. And it's a small range weekly candle. Look at that. Larry Williams shining through. And it's a small range weekly candle. What happens here? You're a buyer. What are you waiting to do? You're waiting to buy here and buy here. I'll zoom in so you guys can see that better because I know I'm blind. I want to see. I'm waiting to buy at the open and at the close. Right? I'm buying in on weakness. So when that next weekly candle comes in, it triggers me in. Once it goes down into that price, that's weakness. I'm buying on weakness, and then I'm buying in on strength at the open of that candle. I press play. Where's my stop loss most likely going to be? It's going to be a hefty stop loss. Absolutely. You're trading on the weekly time frame. That's another opportunity. Right? This is another down close candle. The same thing follows. Same principle follows. Here and here. We'll speed it up because it's taking a little while. I'm going to get to the questions at 9:30. Same thing happens here. I'm not going to draw the candles here, but same thing here. Buying opportunity, buying opportunity, buying opportunity. Another buying opportunity. What happens? We're now above all these down close candles that you were buying in because they're trying to run price higher. That's all they're doing. And even this weekly range candle closed down. So if you are still looking to be a buyer, here's an opportunity. Same thing occurs. You buy here and you buy here. I'm not telling you to do that. Don't come here trying to sue me. Because I already said, I'm not a financial advisor. But if you think that you're still going to be a buyer and price has still higher prices to reach, may it be above a swing high up here, this double top, right? Right here. Could GU reach up here? I don't see why not. It's a reasonable reach to get up here. Will something stop it from going up there? Probably. Maybe the bearish order block. But we don't know. You're trying to pick a side. Price runs up and probably takes this out. But you can see look how powerful that is. Right? Doesn't matter the pair. I could go to the zillion dollar. Look at these down close candles here. Price buys, 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 buys. And you're running up. It's the same way on the way down in a downtrend. Same thing on the downtrend. I want to find a moment in time when the zillion dollar was trending down for a long period of time. Here we go. This is a nice leg down. Like I said, yes, it is hindsight. Oh, Deontay, all you're showing me is hindsight. Yes, I know. Because hindsight teaches us things. So we can anticipate it in the future. This is a trend that's going down. There's a market structure shift. The swing low is broken. Cool. We're waiting for an up close candle to give us a selling opportunity. Look at the two up close weekly candles. And look what happens after the weekly candles. They go down. Up close, sell again. Up close, I'm selling here. Sells. Up close, I'm selling again. Up close, I'm selling again. Until whatever target you're looking for. Your target and my target are going to be completely different. They're not going to be the same. But you're looking for something sound and logical. Where will the market makers get out of their sells? Where will the market makers get out of their buys? If you were controlling price, let's say you today, starting today, you're the market maker. You're controlling price. Yes. It's a huge task, right? It seems you're so responsible now to moving price. But what would you do if you were the market maker? That's what you need to think about. That's how I think about the charts every day. What would what would Deontay do sitting here in his room, 24 years old? What would he do as a market maker? Oh, I would do this. And then you run with that idea. And then you formulate a model around it. Let me check the chat real quick. Check the chat, check the chart, check the chat, check the chat. I apologize. I need to respond to you guys. This is my first live. I really appreciate you guys so much. Thank you so much. Not the alcohol. Caroline Tony. I'll wait for his response to confer. Jay said something in the chat, I guess, and is waiting for my response. Jay, you said something? Larry Williams, but he maybe. Oh yeah, I'm talking about the. Yeah, absolutely, Gemini. Yeah, yep, I'm talking about that book, Long Term Secrets to Short Term Trading. Yep, you're definitely right. You're not wrong. That book, golden. I read that book last night before I went to bed. I found another model. I'm not gonna talk about it here, but I found another model. It was amazing, amazing. But the examples he talks about is really great. We're gonna go to the DXY. I'm gonna talk about how we like to speculate forward price action. So if I'm going into February, these are the things I like to do before we come to an end, because I know it's 9:06 and it's getting late for some people. I want to find February. There we go. So we're not in February yet, right? But this is what I like to do. Looking at the DXY, and I know February is going to come around. I'm going to look back 20 days, 40 days, 6 days. I'm going to find all those highs. I'm going to find all those lows. Those are going to give me a close estimate to what my open float is going to be short term. Not long term, but short term, where large orders are going to be residing within the last 20 to 60 days. That's my open float. There's large orders sitting within that pool of data. Last 60 days, there's a pool of data that the algorithm is working off of, according to ICT. Like I said, do your due diligence. At this point, what am I going to do? I'm going to then go onto another website. I hope you guys can see this. You guys can't see this, actually. Am I live? I'm still live, right? Yeah, I'm still live. Ha! Tripping. You can see, let's see, where is it at? This one here. I better be live. I hope I'm live. Yeah, I am live. Cool. I'm so new to this thing. So it'd come here. This is chartsequityclock.com. I'll just type in, let's say, DXY. I'm going to search. Nope, I'm going to type in dollar. No, I want the dollar index. There we go. I'm normally going to be looking for the one that's probably the one that says FX market. Since this is not going to be, it's not going to give you the FX market, but I'm going to use the USD seasonality one, right? This one here. Doesn't matter which one you click, because people are going to sit here and ask you, oh, which one did you use? Do you have to the S&P one or this one? They're normally just the same. So I would click this here, and then you can't see it here. But what I like to do is, right? So I can't see it here. But what I do is, because they block you here, this is a little trick. You're going to go incognito. Mm-mm-mm. Mm-mm-mm. And you're going to do the same thing. Dollar index. Click this. Boom, you got the chart. I didn't see. People, I'm not paying for anything. Sorry. In my opinion, I don't think I should pay for it. But look, you see February. Look how it rallies. Right? This is the seasonal chart. According to this chart, it's saying that the DXY has possible signs of being bullish. Now I have that in my head, right? DXY. Now I'm going to go back to the chart, and I'm going to look at this chart and speculate. What are the chances of the DXY being bullish? What PD arrays do I see here that's going to tell me that DXY should be going higher? Well, if I go this and I do it like this, DXY daily. I like it this way. Here, and I take December. When you look at this chart, what market maker model does this look like? Accumulation. No, ICT said normally the first few months of the year normally is going to be your manipulation period. What does this look like? Sideways price action, which is what? Accumulation. And then all of a sudden price drops really quick away from it. What did they just do? They probably enticed the public that the dollar index is going to keep going lower. Right? Short term at least. But what could happen in February? According to that seasonal chart. Oops, not this one. This one. February, up. Even going into March. March even shows a higher rally as well. When we come back here, we could potentially think, okay, there is going to be some type of buying scenario here. Possibly. But I need to look at other counterparties. I need to look at what? The 10-year. And I'm literally telling you exactly. The 10-year bond market, the 30-year bond market, and the 5-year bond market. If all of these are making lower lows and lower swing highs, odds are this market is going to keep trending lower. And if we know if bonds are down, this is a direct correlation. If bonds are down, dollar is up. Simple. If this market is going down, DXY, odds are DXY is going up, gold's going down too. This is going up. I don't want to get too specific with it right now, but if you're looking at all these 5-year, 30, and 10-year, and you see they're all going down, odds are DXY is going to go up. And if bonds are going up, currencies is going down. Because what is happening? The central bank traders are taking what? They're buying bonds. They're moving away. They're buying paper bonds. They're moving away from paper fiat currency. They're going back into dollars. They're going back into buying the bonds. And then vice versa. When they start selling the bonds, they're investing into paper currency again. It's a direct correlation. Same thing with gold. If the paper dollar or any euro dollar that you call, Brazilian dollar, pound dollar, yen, Japanese yen, if those things are failing the economy, odds are gold is doing well. And I showed it in the chart as well. Gold has been on a bullish run since November. Straight up. All the way up. Doesn't stop. Now you're telling me you couldn't find, see if you can open. See if you can. I have a link. If anybody wants the link to the Larry Williams book, just text me in the Telegram channel. Some fellow trader in the community was kindly enough to send the whole link. If you want the link to the PDF, you can get it for free. Don't even worry about it. Don't worry about it. But this is what I see here. Accumulation, manipulation, potentially February a distribution. Coming back above the accumulation high. Right there. Mr. Johnson. Yo, what's up, Johnson? Yo. But that's what I see here. Price coming back above the accumulation high for the DXY. Same thing US oil, because someone asked me for my opinion on US oil. Favorite pair to trade? US oil. I love trading US oil. No, anything that you guys need is going to be provided. It's on all my links are on Instagram, LinkedIn. Anything that you need, ask me. Don't be afraid to ask me. Direct message me. I will text you. I'm not anybody to be nervous to talk to at all. Not at all. No, this is the yearly chart. Monthly chart. Look at the monthly chart. Right? Look at the monthly chart. Looking at it, what does this look like? If you were only to look at the chart from here, right here, what would you think US oil is going to do? I like doing this. Like sometimes I don't like to show everything behind because it could confuse people. But when you look at the chart right here, from where there's a recent spark in price action, what do you think price might do here? You got one, the bullish order block. You got what else above it as well? You have that fair value gap or that SIBI that ICT will talk about, the sell side imbalance, buy side inefficiency, right? Market was too quick in selling, didn't refill here. So there's a void in price. It's a fair value gap, whatever. People, no, it's not a fair value gap. It's a SIBI. It's the same thing. It's still an inefficiency. You see that there? Then you have what? Institutional levels. Let's think about some institutional levels that gold that oil will trade around 100, 100 flat, 100 flat, $100. Oh my gosh, gas is gonna go back up. Where does 100 land? 100 lands right in this SIBI. And where is price right now? Currently, according to algorithmic numbers, go here. This is 80, the 80 level. Look at where price has been sitting for a very long time. This is 1 month, 2, 3, 4, 5. And if you measure the order block here to here, if I could get the mean threshold to show, it's respecting what? What ICT teaches us as the consequent encroachment or fair value or the mean point of the order block. Look at how many times it hits that. That's not random. Because it really doesn't want to go down there. Look at how every time it comes down, it goes away, comes down, goes away. But what are we ultimately waiting for? Probably a market maker shift on the lower time frame. We're probably waiting for the daily time frame or the weekly time frame to break a swing high. Do we have that? We do. I have it right there. 1, 2, 3. Market structure shift on the weekly time frame. So I know institutions are probably looking to buy U.S. oil. Gas prices are going up. Get ready to fill up your cars, your trucks, everything. It's going to be expensive again, man. It's going to be tough. But if U.S. oil is looking to be bullish again, odds are it's going to run to what? A higher time frame PDRA, which is this monthly fair value gap here. This is all rebalanced here, right? Price passes down one time, price passes up here twice, another third time here. But here, price never passes through it. So this is left open. Now, if price was to come below this, then odds are it's going to keep going lower, right? If price comes and this swing low, it's not going to, this swing low is broken as well, odds are it's going to probably try to make a lower swing high, and then a lower swing low, and then a lower swing high, and then a lower swing low, and then it's slowly going up, down, up, down. It's not going down in a straight line. It's not doing that. It's reaccumulation, then it's distribution again. It's going from internal liquidity, then back out to external liquidity, and it's dropping through external liquidity quick if it was bearish. Same thing vice versa. If it was bullish, it's going internal, right? It's grabbing liquidity inside the range, and then it's trying to run outside the range. And that's what I was trying to call. I was just trying to call the U.S. oil to at least $1.30. It got so close to $1.30, but it didn't get there. But that's how I would use the higher time frame to use, price delivery action. 100%. Price is delivering itself on every time frame. Doesn't matter the time frame. Another chart that I would like to use. Let's just look at U.S. oil real quick. Because everyone's like, we don't know where U.S. oil is going to go. I have a pretty good odds of what U.S. oil I think it's going to do, especially with what's going on geopolitically. U.S. oil, let's go crude. Right, these are the things I use, the tools and assets that I use. These are metrics. This is not an indicator. These are real statistical data that I'm using. It's using a time frame of the last 20-year range ending in December 31st, 2022. This is the most recent seasonal chart that they uploaded on this website. He's using 20-year range of data and putting the average mean on the chart and displaying it here. Look at this chart. This seasonal chart is telling me that oil is very bullish for 2023. Not bearish. It's saying January is sideways, February is but in the middle of February, it takes off. And the same thing with the DXY. And the DXY was taking off in February as well. In March, it was, and for the DXY, March was taking off as well. And you can see it makes the high of the year, according to this chart, in July. Right? Now we're coming into the summer months. Right? At least here, I live in America, so it would be summer around here. In the summer months, right? Oil is going to probably be in less demand. There's less people looking to heat their homes. They don't need as much oil to be filling their homes and make their house warm and whatever the case may be. But in the colder months, oil tends to have more demand. right? January and February. It's cold around this year in America, at least for me. It's cold in New York. It's freezing outside. And what are most Americans doing here right now? They're buying oil. If they have an oil tank in their house, if they didn't switch over to what is it, gas. If they still got oil and gas, this electric, price goes up, and then price rallies again. And that's the colder months of the year, January, February, right? And then it starts to get warmer, and it makes a peak, and it comes back down, right? Now in September it might be a little warm, but it might get a little nippy again in September and October, right? Demand goes up again. Look at that. It's not random. These are things you have to pay attention to. There's a gold cycle too. ICT talks about this stuff too. They're mining gold at a certain part of the year. They're mining gold at a certain part of the year to get ready to put the gold rings, the gold watches, the gold necklaces, all of the flashy materialistic stuff that Americans like or people like in general, right? All that materialistic stuff, they're mining it. So gold may not be in demand, but they need to get the golds on the shelf by holiday season. They need to get the gold in the shop in all the jewelry stores by December, by 4th of July, any Black Friday, any of those big events. They're trying to get the gold in the marketplace to be sold. So they're mining the gold. And by that time it's time to sell gold. You look at gold chart and you normally see that gold is very expensive because it's in high demand. Let's all make this money. Tesla, forget that gas. Tesla, man. Tesla. Elon Musk, man. What's ICT you keep mentioning? ICT is Michael Huddleston. He is another YouTuber, a huge dude that basically has mentored a lot of traders, free service or even paid prior. But if you go on, type in ICT on YouTube for Jay that's asking, type in ICT, which is Inner Circle Trader. That's basically pretty much where I got all my knowledge from trading. And then other than that, it's Larry Williams. And then there's other YouTubers that I look into as well. But primarily, I'm only using ICT concepts or Larry Williams concepts. That's it. Yeah. So I see it's 9:22 now. And I want to start the Q&A. So if anybody has any question they want to ask me, please ask me. It was a pleasure doing this live stream with you guys. It's my first Forex Fridays with you guys. Amazing talk, man. We're going to get into more charts as each Friday goes on. There's a lot more content coming. You're going to be able to pick my brain. You're going to see my charts. You're going to see a whole process. And I just love the community that, I'm slowly cultivating and, making a safe space for traders to like come and talk and share ideas and not to be afraid to like ask a question, Some people are too shy or too timid to ask me. I'm like, yo, shoot me a text on Telegram. Shoot me a text on IG. I'll respond. I would send you 6 paragraphs if I have to. I appreciate it, guys. Best way to get started as a new trader? That's a great question. I even have a video on it. But I say the best way to get started as a trader is learning open, high, low, and close, and learning these two things. Large range, small range. That's all you need to know. And I'm going to show you briefly, but when you do it yourself on your chart, you're going to realize what I'm talking about. Larry Williams has said in his book, Long-Term Trading, Short-Term Trading, I forgot the name of the book, but that book that he says there are only 2 natural cycles, according to him at least. There are only 2 natural cycles in the market, large range and small range. And whenever the market is in a large range, let's take this for instance. This is for Jay's question. What should a new trader be focusing on? Whenever there is a large range in the market, odds are the next candle, this is a monthly chart by the way, the next candle is going to be small. Odds are. The probability of it being a smaller range candle than this candle is probably going to be small. Why is that? Because the large candle has excitement to it. When we as human beings see a large candle, that makes us excited. The public is like, wow, what a large candle. Think about that. Psychologically, when you see a large candle, you're thinking to yourself, oh my gosh, I missed that. I missed that. I missed the trade. And what do? You normally try to jump in and you already missed the party. You're buying at the high or you're buying way beyond the range expansion. What did she say? Who said? And what happened the next day? Look how small this candle is. The next month, I'm sorry. This is the monthly time frame, but it's on all time frames. It's the same thing. Look how small this candle is. This is now probably your opportunity to know that next month is going to be what? A large range. A large range cycle. You know, next month, odds are the candle might be larger than the previous one. So you play this through, and we're expecting or anticipating that this candle may be larger. It isn't. It's still a small range cycle. You see, it's still small. But we know in the future, this is the key point. In the future, sometime in the future, you're going to get that big candle that everybody gets hyped about and salivating about. You know it's going to come one day. You know it's going to come one month. It's going to be large. But when you see the candle start doing this, look how small these candles are compared to this large candle. Sooner or later, you're going to get a large candle. Look large, small, 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 large, small, large, 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 small again. Eventually, what are you going to get? Dynamic buying or dynamic selling. The candle is just going to be larger again. I think you mentioned preferably monthly slower than 1 minute and hourly trades, right? I think you mentioned you prefer monthly slow trading than the yes. I personally I've made the decision that I do not like intraday trading. The reason I say that is because I know that I'm a swing trader and I have the patience to do that. I have the discipline to do that. And I have other things in my life that I have to take care of course. I like to work out. I like to chill with my family and my homies and stuff like that. So I don't want to be staying up till midnight, 2 a.m., 5 a.m. trying to trade. I want to look at the chart, say, okay, I'm buying today. Okay, buy. And I'm not looking at the chart for a couple weeks or something. So, I may monitor it, make sure that everything is going right. But I'm not really trying to stress myself intraday anymore. I realize it's too much stress for me personally as a trader. Look at how the market's in small range cycle and look at the large range. There's only two cycles in the market. That's what Larry Williams was talking about. Large range, small range. And after a large range, you're going to get a small range. And after a small range, you're going to get a large range. That being said, what is your average stop loss for swing trading for you? It's going to be large. It's going to be anywhere from probably 200, 300 pips, honestly. It's a higher time frame. It's a daily. So let's say we're looking at the daily chart. And I'm looking to take a trade here. My stop loss is probably below here. It's worked amazing. It's worked amazing. I'll even show you an example. It's worked amazing. Long-term trading is amazing, man. It's wealth, generating wealth. But you have to be patient. People will sit here and say, oh, but I'm not making money quick. Yeah, it's not a get-rich-quick scheme. I'm not in it. I'm not in it for the short run. I'm in it for the long run. You don't ever hear Larry Williams talking about New York Open, London Open, Asian Open. Read the book. You don't ever hear Larry Williams talking about the lower time frame. In that book, he's talking about the daily time frame, the weekly time frame, and the monthly time frame. Larry Williams is not talking about the 1 hour, the 15 minute, this minute. He's not talking about those things. Let's see. Where is it at? Yeah, Larry Williams is not concerned with intraday trading, and he made millions. I passed it. This is such a wow. That's the progression of my charts. Look how my charts were like so much more sloppy. Definitely passed it. Oh, there it is. Not this one. I'm looking for the IPTA data range ones that I put out. Many examples here. Look at UCAD. This is a good example. This is 2001. November 2001. This is the example I put up here. I'm using the same model that ICT teach. I'm not changing the model. Because I know there's a lot of people out here trying to, they take the model and they add a little swagger to it and stuff like that. I'm literally going word for word what he's telling me, not changing it. Word for word. He's telling me look back 20, 40, 60 days, mark off this high, mark off this low. I do that. And then he said look for the PD arrays, look for all the other things, and look at the thoughts. November 2nd. Since I am bullish on the DXY, I am bullish on UCAD. I'm using a measure. I'm comparing another commodity. I'm using another asset class. I'm using the DXY here. If I'm bullish on DXY, I'm bullish on UCAD. We recently see that price reclaimed a bullish order block and tested the mean threshold and started to rally. Looking at the current trading range, we are in a discount portion of the range, which calls for more buying opportunities. I have marked off some fair value gaps above price where we can see the draw on liquidity. Seasonally, the Canadian dollar is bearish in November. That's the website I was talking about. I was using the website and saying going into November, Canadian dollar is going to be weak, dollar is going to be strong. You click play and look at the results. That is long-term trading right there. If someone was to hold this potentially for 2 months, a month at least, this is November to December. This is a 1 month hold basically. Stop TP hit, right? It runs the high, and here you can see some people may say, "But Deontay, you're using the opening price or the bodies of the candle here," because the true volume resides around the candles. I'm not using the wicks here. I'm using the bodies here. I'm trying to get out above the bodies. I don't know if it's going to get above the wick. It can, but it doesn't have to. Once it gets above the bodies open or the bodies closed, it's done mitigated the liquidity. It could turn around on a dime. It runs all the way up here. It runs above this one. It runs above the 40-day high here, the actual wick itself. You can see it runs above it and then it turns around. Right? That's how this is IPTA. IPTA told me what to look for. It's almost like 20/20 vision. Almost. I mean, sometimes I'm gonna get it wrong. There are plenty of examples that I posted on TradingView where I'm not right. I'm not sitting here saying I'm getting it right. Let's look at another example. Where is the bullish one? Oh, that's a UCAD. I was explaining how I got the UCAD one. Here, US oil. This is probably the best trade I've ever taken in my life. Best trade I've ever taken in my life. Price comes down, hits a bullish order block. I'm using the 20-day high, 40-day high, and 60-day high going into December. Remember what I told you about US oil. US oil is normally going to be in high demand in the colder parts of the year. It's December. But no one knew. I mean, obviously, it was a super bullish cycle because of Ukraine war, inflation, and stuff. So it was really dramatically bullish going into 2022. But using IPTA and using these ranges, I was able to scope out this. Bullish order block, price takes out the 20-day low. Right down there. Takes out the 20-day low, hits the bullish order block, and I'm in. The stop loss is pretty hefty. It's on the daily time frame. I'm in, and what happens? Price takes off. But I want you to notice something here, right? I want you to notice something here. Comes up, hits the SIBI. Look at the imbalance here. Hits the SIBI. And what? Rejects off of it one more time. What does it hit? A sensitive price point. 60-day low. Look at the 60-day low price point here. Draw down in price. Look at how price runs right into it. Boom. Yeah, it's crazy when you see it. I'm not saying every month it's like this, because there are months where I use IPTA and it doesn't go that way. Sometimes I'm sitting there, I'm like, damn, IPTA's not really doing what I want it to do, or it's not following the seasonal trend. Price comes down, hits the 60-day low. It's using past data. It's cutting through all these candles. That's why retail traders fail. Support and resistance. That's garbage. Comes back down, hits it, then it rallies, goes back up into the SIBI once more, comes above the SIBI, the top of the SIBI, the premium side of the SIBI right here, the fair value gap. Look at that line. Price comes down. I can't zoom in. I'm sorry. It comes down here, hits it, and then cast for it 20 days exactly. In 20 days, basically December 29th or so, right? Or December 30th. In 20 days, the market was looking for a new liquidity pool, which is what ICT was teaching. Every 20 days, the market is normally going to either continue its trend or going to find a new liquidity pool. And that's what happened here. 28 ran up. What does it do here? It hits the 40-day low at this point now. It also hits a bearish order block here. These last up close candles, it gives a nice reaction. But I'm solely using the 40-day low. I'm using that 40-day low here. Look how price consolidates around it multiple times, that 40-day low. And then it finally takes off. What does it hit now? After hitting that, what does it hit? The 40-day high. No, the 60-day high. Look at how it hits the 60-day high and stalls out once more and consolidates. Gives two down closed candles, another buying opportunity. Like I said earlier in the stream. Then price what? Runs higher. And then takes out what? The 20-day high, the 40-day high. And then oil is all the way up here now. And that's when everybody thought the world was coming to an end. If oil was going to get up to $200 a barrel, the world would collapse, man. But that's how I was using IPTA. This is a great example. This just happened to be over exaggerated because of geopolitical terms, seasonality, and happened to turn into a bullish super run. But not every month am I going to get a super mega trade like this. This is just once in a lifetime. I mean, hopefully in my trading career, I'm able to capture another trade like this using the higher time frame. But this is a mega trade here. But most people are not interested in seeing this. I'm interested in seeing these trades. And this comes down to the question of the day, the topic of the day. What style of trading should you take on? That's a great question. That all depends up to you and your personality and your characteristics. Are you somebody in the market that doesn't have proper risk management? Okay, you don't have proper risk management? Well, trade on the higher time frame. That's guaranteed going to make you trade with less lot sizes because you know that you can't go on a daily time frame going in 3% of your account equity. And if it drops 10 pips, you're in drawdown massively and you can't hold that. So you know you're probably risking less than 1% every time. You're using a micro lot. And every time you get one of these down close candles, you're using a micro lot to get in again, to stack a position and compound and compound and compound and compound. And then eventually those micro lots pay off. But most traders want to see the short-term results. I'm not here for short-term results. I'm here for long-term results. Because I know the people that are making big money in Forex, they're holding for more than 2 months. Promise you that. The people that are making big money in Forex, they're not short-term traders. But if you personally, as your personality, like ICT said himself, he can't do long-term trading. He said he has a personality where he's not that patient. He's impatient. So he said, I like to trade intraday. And he mastered his craft in years and years and years and years and years. And he finally understood, oh, this is my model, or this is IPTA, or this is Enigma, or whatever model he figured out in cracking the market code, or whatever it is. He figured something out for himself that works. And he's teaching us that. And then when I saw his long-term trading model, I was like, wow, I really like that. And I know that I'm patient enough to hold a trade for a week, 2 weeks, and not check my phone. But if you have to check your phone constantly, then odds are you're a short-term trader. Yeah, man. I'm so glad I'm able to inspire. That's all I want to do. I want to motivate and show people a different point of view of trading. I think it's the market of Forex has been given such a bad taste, especially with all those IML pyramid scheme stuff. Like that stuff gave Forex a bad rep, especially in specific demographics in certain communities. I won't get into that. But Forex had been given a bad rep because of that. And then plus on top of that, a lot of people have been persuaded that Forex is simply an indicator. It's not an indicator. It's transactions. Forex is transactions that's occurring. You're trying to make a transaction. These big dogs are making transactions. Where they're making these big old transactions to get US oil to this price or get pound Swissy or let's say not even Aussie U, like New Zealand, no, these are futures. Even the futures contract. When these people are trading, the commercial speculators are trading, they're trading contracts, huge amounts of orders in between central banks. They're trying to mitigate risk during these transitions. They're not trying to lose money. The commercials are not in this game to lose money. However, retail traders are in this game to win money, but we're the ones losing all the money. We're the ones losing all the money. Like I said, retail traders, their first initial deposit into a live account, no matter what account it is, it could be a funded account, it could be FTMO, it could be whatever account that you like. Within 6 months, they lose the account. When people get funded, within 6 months they lose the account. It's statistically proven. 98% of traders, 6 months, lose their first initial deposit. That's an insane statistic. That was me too. That was me too, Mr. Johnson. 100%. I've been there. I've been there. Been in my college dorm, taking money out of my savings and trying to spend and trying to learn how to trade. And I really didn't know how to trade. And I'm blowing money. And my parents are looking at me like, yo, D, what are you doing? I'm like, I'm just trying to learn this little Forex thing. They think, oh, I think you should stop. And then I said, nah, I'm gonna keep going because I see potential in it. And it took me a long time to understand who I truly was personally, like my personality and my nature. I'm very disciplined. I wake up at a certain morning, I go to sleep at a certain morning, depending on trading, of course. I like to work out, I like to read books, I like to go for walks. I like to do those things, but I can't do those things if I'm a short-term trader. Impossible. I can't. Yeah, stick to one concept, or a basket of concepts, that help you in certain situations. Which is multiple times during Telegram I said, I'm switching back to this model because I have things going on in my life that takes me away from the chart. So I need to switch back into high probability scalping, or high probability scalping and then a trending model. I need to switch back into, okay, I have more free time on my hand. I could go intraday trading. Now I could go trade London session, New York session. But once that time is gone and I have my responsibilities outside of Forex, I can't do intraday trading. I'll be honest with you. I can't do it anymore. That day I stood up. I've lost countless of hours. Very sleep deprived. Very sleep deprived. A lot of traders are sleep deprived. Be honest with yourself. A lot of people aren't honest with themselves. Look yourself in the mirror some days, and then see. Look at your face sometimes. The bags underneath your eyes, probably a couple gray hairs, a little wrinkle here. You haven't been working out a little bit. Might be putting on a little pounds. Nothing wrong with putting on some pounds, but you know, lifestyle, because you're all dedicating yourself to what? A chart. And I told myself in 2021, I think, or 2020, I said I will no longer be a slave to the chart. And you quote me on that. Deontay said that. I will no longer be a slave to the chart. I do not want to be a slave to the chart. I'm tired of staring at this chart. My health is important. I understand. We live in this world where money gets us places. It's unfortunate that it's the game that we play. It's been pitched this way. We live the game. It's the system. We have to make money in order to move on in life. Oh well. But my health comes first. And I realized my model of trading that I need to take on is swing trading. And I showed you a great example with the US oil trade. Even that snap was it this one? Was it the AU smash day one? I think this one probably no, this one was stopped. But look at the stop loss. Look at the stop loss. Look at the stop loss. Look at this. Look at the trade I framed here. 115 pip SL. That's a large stop loss. Most people be like, "Dang, it's a hefty stop loss." Of course it is, because I don't want to. I know it's a daily time frame, and I don't want. And I think I got. Yeah, I definitely got stopped here. But this is a Larry Williams model, a smash day model. Something I'm still trying to learn myself. But there are definitely other ways for you to win in the market. Don't think it's one side. Learn yourself first. Who are you as a trader? Besides that, who are you outside of a trader? Who is Mr. Johnson? Who is Caroline? Who is Gemini? Who is Jay? Outside of being a trader, who are you as a person? What is your personality traits? Then apply that to the charts. Yeah. 9 to 5, man. They've got everybody in that plantation system, bro. They've got everybody set up in that. That 9 to 5 job will get you, man. It will get you. It's a loophole. Everybody knows it's shackled up. Everybody can't break away, but you'll slowly will work your way to freedom. And I want to tell you this before I end it, because it is getting late. Even when you make it, even when you make it, even when you really make it, you're financially free, you're not free. Now, why do I say that? You're not free because your friends aren't financially free. Your family isn't financially free. Your brothers and sisters aren't financially free, right? Like J. Cole said, I like to listen to hip hop a little bit. What's the point of me sitting first class if my homies can't sit? How am I sitting first class and my homies are sitting commercial? That doesn't make any sense. I need my homies to also make it too. They need to know the knowledge that I know that made me the millions of dollars, or maybe the $10,000 I made every month, or whatever the case may be, that I was able to be profitable on that month, or whatever payout I made from FTMO. I need them to learn that too, so that they can live the lifestyle I want to live too. I'm not financially. When you're financially free, you're not free. Tell me one rich person that doesn't work. And I'm not talking about politicians either, because politicians don't work. They just talk. Tell me one person that's free, financially free, that doesn't work. Nobody. There's nobody out here that I know that. They all are working because they know they have to provide for them, their wife, their husband, their kids, their future generation. They need that thing to be set in stone. So there's no days off, unfortunately. As much as we're reaching for this ideology of we're going to be free. You're not free. You're never free. It's a hard pill to swallow. You're never free. You need to. What do you mean? I'm rich, but my little brother isn't rich? That doesn't make any sense. I need my little brother to learn this Forex stuff too. I'm rich, but my girlfriend isn't. I need my girlfriend to learn this Forex stuff too. And even if it's not Forex, or even if it's not trading, I need them to learn something that could get them financially free as well. So my work is not done. It goes beyond just trading. It's all fun and games. Yeah, we can sit here and look at the charts and stuff like that. But what's the bigger picture here? What is the bigger picture of life? I'm trying. Yes, exactly. I'm investing. I'm not a consumer. I'm an investor. Everyone wants to consume. Oh, I want to buy the car. I want to buy the chain. Oh, I got to go partying every Friday night. Every Friday night, I'm going to be right here live. I'm not going to no club. I'm not going nowhere to throw no money. I'm keeping my money in my pocket and putting it into assets. I'm investing. I'm doing whatever it takes so that the future bloodline of my family can be prosperous and move on. I'm not wasting time. Every Friday, I'm going to be here live. No matter if it's 2 people, 1 person, 1,000 people, 1,000,000 people, I'm going to be here live on Friday, every Friday at 8 p.m. And if I'm late, I'm late. You guys can criticize me on that. Yo, Deontay, you slacking. Yeah, I am slacking. Get on me. I'm slacking. You said it was 8 o'clock. It's 8:15. What's going on? Oh, my bad, y'all. Next time it won't happen. Things like that. I'm not sitting here trying to say, I'm not trying to sell a dream or anything. But it's bigger than Forex. I just want you guys to know that it's bigger than Forex. It's bigger than the money. It's bigger than the money. It's always been bigger than the money. Always. It's not the dollar bill that you have in your pocket. It's not the credit card limit that you have or the loans that you have. It's not that. It's not that. I'm not sitting up here on YouTube trying to say, oh, I'm trying to put out YouTube and trying to get 500 million subscribers. No. It's bigger than that. Money does not measure the success of a man or woman. The amount that I have in my bank account does not make me successful. That doesn't mean nothing. I can have $10 I can have $0 in my bank account today. I am still successful. To whose means do I say that I need millions of dollars in the bank to be successful? All of you guys that are watching this stream right now live are successful. You've made it through hardship. You are successful. You made it through tough times. You are successful. You made it through challenging times. You overcome. You are successful. Don't sit here and let people point the finger and say, oh, you're not successful because you didn't make millions of dollars yet. No, you're successful. But you're using someone else's measure to measure your success. You're already successful. You being born was a success. You going through school and college was a success. You being a father was a success. You being a success. You're successful. These materialistic things don't mean anything, but I don't mean to go on a tangent. Hope you guys really appreciate what I did today, man. I know I went off a little tangent at the end. I apologize. I'm really passionate about this life thing, man. Life is bigger than this Forex stuff, man. And I'm not sitting here to say, oh, I'm trying to be the top Forex YouTuber. No, I'm not trying to be that dude because I know I'm not. Unfortunately, the world is construed to people that show flashy money, flashy cars. You know what I mean? All that hype gimmicky stuff. If I go on YouTube right now and type in Forex, we all know who's the first Forex trader to come up. It's not ICT. If you thought it was ICT, it's not ICT. It's actually Mamba FX. He's the first dude that comes up when you type in Forex. And look at all his channel stuff. Look at everything he posts. Not to bash the dude, but he knows what he's doing. He's not sitting here showing you big. He's showing you the clickbait thumbnails. Clickbait thumbnails? What do you mean? I have to put money in my thumbnails to attract you to my video? That's how far we've come as a society? I have to put a Tesla or a Lamborghini in my thumbnail to make you click my video to teach you knowledge? That's garbage. They're selling a dream. I'm not sitting and selling a dream. I'm trying to show you real results. I'm trying to show you real trading. I'm trying to show you my experience, my journey. I'm going to show you the FTMO journey. I'm going to show you $100 how to flip $100. I'm going to show you one-on-one Zoom sessions, me teaching someone live. I'm going to do that. I'm going to do all those things for you guys. I'm going to take a Signal chat, right? I'm going to pay. I'm literally going to take my hard-earned money and pay for someone's signals to show you that signals is detrimental as well. Don't sit here and allow someone to say, "Oh, buy my Signal service. It's going to be the best thing ever in your life. Will make you 2% a month or 3% or 10%." No, you're not. Because it doesn't work that way. Logically, it's not sound. You're going to send me a signal, but I'm at work. I'm at my computer desk. What, I'm going to have to take out my iPhone and then type in the stop loss and the TP. Doesn't make sense. Thank you guys. Okay, thank you guys. Thank you. I appreciate it. But to wrap it up, man, I trade Forex. And I seriously trade. I don't trade just to joke around. I trade so that I can make a living. You know, this is my 9 to 5. This is my job. Full-time trader. I'm not out here trying to go get another job. No, I'm trying to do this for the rest of my life. I want to teach other people that they can do it themselves too. And I hope I've motivated you tonight. I hope I've gotten a new subscriber or I've influenced you somehow, some way. I've helped you down the line. That's all I want to do. I want to help somebody. I want to show somebody something new. I want to expose them to something that they've never seen before or in a different light. Yeah, man. Wow, that was our first Forex Fridays. Yo, that's so cool. Let's go. Yo, I appreciate you guys. Much love, man. Yeah, man. Yeah, I'm lost for words, man. I'm full of like enthusiasm and dopamine. Man, like, yo, I'm so happy, man. Man. It's a pleasure, man. I will be here every day, every Friday at 8 p.m. You'll see me here. It could be one person, it could be two people. You don't have to watch the whole thing. You could come back next week and watch it. Doesn't matter. I'll be here because I want to prove to people consistency plays out in the long term. I'm not here for shortcuts because I know there's no shortcut to life. I'm not going to sit here and sign my life away to the devil. I'm not sitting here trying to sign my life away to some boss or some 9 to 5. No, I'm going to show you consistency and hard work, and it pays off. It pays off. You pay it forward. You pay it forward. Not a thing. I won't sit here and never charge anybody a dime to learn Forex. For what? For what? I want you to win too. Signal service. Come join my Discord service for $5 a month. No, I'm not doing that. We're not doing that. We're not doing that. This is all a free game. It's already out there. I learned how to trade for free. Whether or not I went through mentorship and paid ICT throughout mentorship in 2021, doesn't matter because I wanted to do that. But now it's out there. ICT uploaded all the videos. It's out there. Everybody can. Oh, D, can you please log in and give me the videos? No, because now it's out there. Go learn. It's all out there. Most respect, guys. Yo, it's Deontay signing out, man. Man, it's Forensic Forex, man. Signing out, man. It's my pleasure, man. Guys, be safe. Enjoy the weekend. Safe trading. Peace.